This is the Asia Trade. I'm Paul Allen in Sydney, where the markets just opened.
I'm Heidi, Stroud-Watts. The top stories this hour. Treasuries take a hit as solid US retail sales have traders trimming bets on Fed rate cuts this year. Oil edging higher after Israel kills a Hamas leader behind the October 7 attacks. A gauge of US-listed Chinese shares sliding ahead of data set to show its pre-stimulus economy grew at the weakest pace in 6 quarters. And Couche-Tard's chairman and founder tells Bloomberg they want to buy the whole of Seven & I, brushing aside antitrust concerns.
Well, we've just opened for trade here in Australia. Always hard to get a read on things in the early going with the staggered open, but right out of the gate we do have Beach Energy higher by about 1%, perhaps unsurprising as the oil price pops on developments in the Middle East. Might be worth keeping an eye on gold miners in Australia as well. The gold price has hit a record, and in Aussie dollars it's cracked 4,000 Australian dollars per ounce. We of course had a strong jobs data out of Australia yesterday, so easing from the RBA seems as distant as ever. But a lot of data to watch as well, particularly out of Japan. Getting CPI numbers a little bit later. Could be a bit softer due to utility subsidies, but then the big macro event of the day, that China data dump, GDP data, industrial production, retail sales all coming out later. We're not expecting fabulous things in terms of those growth numbers though, Heidi.
No, so that sort of pre-stimulus sort of context needs to be taken right, but still a lot of question marks over whether the fresh stimulus is going to have the impact as intended and hoped for. But let's take a look at what we're watching when it comes to US trading. US futures looking a little bit like this. We did see bonds selling off. That sell-off in treasuries really strengthening the dollar as well, leaving equities looking pretty mixed. There's yet more signs of economic vigour when it comes to the US economy. Traders are moving to further trim those expectations for what they expect from the Fed. But we did see swaps traders further cutting those bets that the Fed rate cuts will be coming through in the remaining 2 meetings of the year. And we saw that jump in yields pushing the dollar index higher for a 4th day. We're now at the highest level since early August. Also watching energy markets, of course, we're seeing oil edging just a little bit higher, just shy of $71 there when it comes to trading in New York crude. 4 sessions of declines being reversed as we're sort of weighing US crude stockpiles declining, but also the potential risks to production in the Middle East, some of the underwhelming stimulus measures from China as well. But of course, these latest developments in the Middle East are really what we're watching. Israel says it's killed Hamas leader Yahya Sinwar, who was seen as really the architect of the October 7th attack on Israel that sparked the conflict in Gaza. Israeli Prime Minister Benjamin Netanyahu has vowed to keep fighting until all hostages still held by Hamas are freed. But the US sees Sinwar's death as a pathway to end the war in Gaza.
Israel has a right to defend itself, and the threat Hamas poses to Israel must be eliminated. Today, there is clear progress toward that goal. Hamas is decimated, and its leadership is eliminated. This moment gives us an opportunity to finally end the war in Gaza.
Bloomberg's Michael Heath joins us now. So it seems like it was a chance encounter, which is extraordinary after more than a year.
Yeah, I mean, we've seen these amazing recent successes by Israel's intelligence services, but this wasn't one of them. Previously, they'd come across Sinwar, but he's usually been shielded by the hostages, so they were never able to take a shot in those brief encounters because of the risk of killing. Some of those people were taken on October 7th. But yeah, it looks like that they've fired on a building. They've come across him, and he turned out to be one of the casualties there. I mean, but it's an extraordinarily important moment in the context of this conflict. I mean, I think what Vice President Harris said that is exactly right. I mean, the hostages now become the critical issue because there's 2 choices here: either whoever they can find from Hamas to negotiate with. Either they're going to release the hostages and allow some form of truce or end to this war to come about, or enraged by what's happened to Sinwar, they execute the hostages. And I mean, there was 101 that were still around. About half of them are thought to be alive. But yeah, this is sort of now what we're really looking for.
Well, of course, the US saying there that this is an opportunity in a way, perhaps an off-ramp to end the war. But then again, Sinwar will have deputies. He is now a martyr. Is this really an off-ramp?
Yeah, well, look, I mean, potentially it is. He represented the most extreme version of Hamas's ideology. I mean, he's a combination highly intelligent, very, very strong, extremely charismatic. I mean, he's a unique combination of leadership there. So whoever comes after isn't going to be able to replicate that. Some of the names, his younger brother has been named, who's in Gaza. Some of the leaders who are in Qatar are potentially named. I mean, those ones in Qatar tend to be more moderate. They enjoy the sort of better lifestyle of living in a more comfortable environment. But yes, someone will replace him. But the question is just, how do they picture things? I mean, is it worth pursuing this? Is it worth continuing it? I mean, the suffering on the people in Gaza is just horrendous. And for Israel now, I mean, the US pressure is going to increase. The US really, particularly, with an election just a few weeks away, they really want this conflict to win. They don't want it interfering in the US election. And this is it's going to be a really, really interesting time coming up now.
All right, Bloomberg's Michael Heath there. China's economy probably grew last quarter at its slowest pace since the beginning of last year, underlining why Beijing rolled out a series of stimulus measures. Our Chief North Asia correspondent Stephen Engel joins us now from Hong Kong. So, Steve, what are we expecting from the third quarter GDP reading? We're going to get that later this morning.
Well, we're expecting what we already know, and that is the second quarter was pretty weak. It's essentially justified that end of September raft of stimulus measures that gave some euphoria, obviously, to the markets and as intended to be a confidence boost. But we're already starting to see that wane a little bit because of lack of details on any dollar figure or renminbi figure on fiscal stimulus. They've been holding back on that. Maybe there's still time, of course, to meet that end-of-year target of around 5% growth, and that's what Xi Jinping earlier this week essentially implored authorities across the country to do everything possible to reach that goal, but it doesn't look promising right now. The expectation is for 4.5% growth in the second quarter that ended, of course, at the end of September. We got the first batch of stimulus at the end of September, so perhaps that does take some time to feed into the economy, and that could give an end-of-year boost. But as you can see, most of the figures that we're going to be getting today, including that third quarter GDP, as well as industrial production for September. We're also going to get retail sales. We're going to get fixed asset urban investment. We're also going to get property investment year-to-date figure, which eased a bit, but still down another 10% on the year-to-date figure. Property is still a huge drag, no doubt, as is the consumer. Look at those retail sales, and we can bring up a bar chart to look at the retail sales. It has been in single-digit growth for 7 consecutive months, and the prospects do not necessarily look good. So again, it's going to confirm later today at 10 o'clock local time here in Hong Kong and Beijing that GDP will be slowing further, but maybe a little bit of optimism from that stimulus, but still wanting more fiscal measures.
And Steve, as you mentioned, the effect when it comes to sentiment of the stimulus announcements already appears to be wearing thin, even before we've seen the transmission effect of the actual stimulus measures, right? So what's being sort of expected next from authorities? We had the housing briefing yesterday.
That's right. There's been a number of different press conferences, haven't there? The finance ministry had one on Saturday, but again, keep in mind, they kind of held off from giving any kind of headline number as far as any kind of fiscal stimulus, and that disappointed the market. The housing, authorities met the press yesterday, and yet, as expected, there was no new major stimulus announced. What we're probably waiting for is at the end of this month or early in November, we're going to get the National People's Congress Standing Committee meeting. They have to essentially approve any, revisions or supplementary budgets or any revisions to the quotas on bond sales. So perhaps we could see after that meeting, a closed-door meeting, obviously, in Beijing, any kind of boost in fiscal stimulus. Robin Xing, the chief China economist at Morgan Stanley, this is what he had to say as far as the expectations for further stimulus. A large-scale consumption-focused package aimed at driving decisive reflation is unlikely, he says, and he does acknowledge that Beijing is progressing with debt restructuring and rekindling confidence, but again, rebalancing and getting any kind of consumption going is going to be bumpy.
Our Chief North Asia correspondent Stephen Angle along for the ride there. One of our other top stories that we're watching, Alimentation Couche-Tard's chairman and founder says the firm wants to buy the entirety of Seven & I. Alain Bouchard says the company will keep the local operations of the Japanese convenience store intact. Our senior editor, Reid Stevenson, joins us now for more. This is such a fascinating insight right on this potential deal that we've been watching for many weeks now. What did we learn and what sort of stood out to you in it?
Indeed, it's been a really interesting week. I mean, just about 8 days ago, Bloomberg exclusively reported on a higher bid offered by Couche-Tard for Seven & I. And now we learned this week that, the entire management team, including the founder, Alain Bouchard, were in Tokyo, and we did get a chance to talk to them. And essentially, they came here with a message, and they wanted to sort of assuage any concerns over getting a deal done, saying that their goal isn't to break up the company, their goal isn't just part of the company, they want the entire enterprise, and they really want to sort of come in a friendly manner to try and convince both the management and stakeholders and investors that they're really kind of committed to coming in and running the business and really making something of it. And so sitting down with them, you got that sort of charm offensive coming through very, very clearly here in Tokyo.
Reid, you got to talk to Couche-Tard, but Couche-Tard didn't get to talk to Seven & I. How realistic is it, especially considering the price tag as well and regulatory concerns, that this ever actually happens?
Indeed. I mean, we learned that they had tried to meet with management and at the moment have been rebuffed just as they were for the first indicated price for the company. On the other hand, essentially, the way that the sort of governance structure has been set up is that Couche-Tard really needs to talk to the head of the special committee, Steve Dacus, who is kind of running the show before any proposals make their way to the chairman of the board, etc. And that person, Mr. Dacus, was not in Tokyo at the time, and so really they had to sort of talk to other stakeholders and also kind of make a direct appeal, through the media. As to what their thinking is. And, it's actually quite significant because Couche-Tard is quite a media-shy company, and for them to come out and sort of be as forthcoming says a lot about their seriousness and their interest.
There's been antitrust concerns from both sides, right? And Couche-Tard may be dealing with that on the US side as well. How serious are these worries in terms of potentially, as both of these companies have in the past, mean in terms of divestments?
Indeed, that is one of the things that Seven & I cited as a concern when it made its initial response to Couche-Tard. We did put the question to the management team, and essentially what they told us was, we've done this before, we're used to it, we actually have a plan, we want to put it in front of Seven & I's management once we get to a stage of negotiations and NDAs, etc. And so they seem very confident that they could resolve any of these issues because they actually have a track record of it and really want to put that plan forward. So all in all, it was quite interesting after a long period of essentially silence that we're getting a lot of these details coming out. And look, I mean, this is one of the most this if consummated, this would be the biggest ever inbound corporate takeover of a Japanese company. And also keep in mind, I mean, this is a litmus test of how open corporate Japan is for these sorts of things to happen after years of improving governance, loosening things up, and really creating the environment for a big deal like this to happen. I mean, we're talking about $50 billion here.
All right, senior editor Reid Stevenson there. Still to come on the Asia trade, we're going to have some more on Couche-Tard's bid to take over Seven & I. Comgest Asset Management is going to join us to unpack the latest developments.
Still ahead, Allspring Global Investments joins us to talk about market strategy as the US election puts a spotlight on tariffs. NF Trinity will be explaining to us why they see better prospects for China and Asian assets. Plus, we take a look ahead at China's September activity data with UBS Investment Bank. More to come. This is Bloomberg.
calls for walling America off with high tariffs on friends and competitors alike, or by treating even our closest allies as transactional partners, are deeply misguided. Sweeping, untargeted tariffs would raise prices for American families and make our businesses less competitive.
US Treasury Secretary Janet Yellen, they're warning against the use of sweeping tariffs. Let's bring in Margie Patel, who's a Senior Portfolio Manager for Multi-Asset Solutions at Allspring Global Investments. Margie, really great to have you with us. And we're inching ever closer to the November US election. How high does political risk and geopolitical risk rank for you at the moment?
Well, I don't think, as far as the economy and the stock market, there's really much of a risk. The market has been telegraphing continued economic strength. The sectors that have done well are those sectors that are economically sensitive, like technology, industrials, and even the financial sector's been reporting very, very good earnings here at the start of the quarter. And I think really a lot of what both parties have said are really more or less aligned. They both will be looking towards some sort of tariff or price barriers to keep imports from coming in, and also improving domestic energy supply. So I think at the end of the day, there is not going to be a tremendous amount of difference in either party's approach after the election.
A lot of this might be complicated by the growth trajectory or the rebound that we see out of China, right? Have you been, in the camp that has been impressed by what's been announced so far? Do you think it meaningfully changes the outlook for risk assets in China?
No, I think that the amount of money that's been put in won't really move the needle too much to stimulate the economy, because the problem is just too big and intractable. Really, the economy is a question of real estate and exports, and both of those are under pressure. And a few $billion yen is not going to make a difference. When you look at housing in China, already you have, 90 billion units that need to be placed in a time when the whole population is housed. And I think about 1 in 5 households own investment properties. So you just really have to say, how much will stimulus help to move the housing market? So we're pretty lukewarm on China. We think getting the growth to accelerate is going to be very, very difficult.
What would you need to see in terms of a policy shift in China to persuade you to get long and to buy some Chinese assets?
Well, I think that it's really nothing, because so much of the economy, when you look at real estate, that's about 18% of the whole economy. For comparison, in the U.S., the number is about 6 or 7%. And when you look at the other part of the economy, really, China is driven for export-oriented industries. And when you see around the world, not only low growth, but also not just the U.S., but Europe, and also even some of the emerging markets are trying to put up barriers to Chinese imports coming into their country. So we think it's going to be very difficult to do anything except kind of shore up the weaker parts of the economy. So we're looking for growth to continue to decelerate from that 4.5% to an even lower level.
So if you're not keen on China, I'd be interested to know what are your favourite positions at the moment. And something we have seen is a rise in the so-called Trump trade again, making a comeback. Are you making any adjustments to your allocation in this regard? I mean, we heard from Stan Druckenmiller yesterday saying markets have pretty much priced this in as a done deal, as a Trump victory.
Mm-hmm. Well, who knows? It's to me, I'm not going to feel about the election until we actually see. As I said, I think both of the parties are pursuing the same goals for what they'd like to do after the election, which would be to really support the domestic economy. Our last quarter growth was 3%, which is really pretty strong if you compare that to other developed nations. And really already we're seeing, I think, signs of real strength in the earnings this season. We've had maybe 10% of companies report. Again, they surprised on the upside. Their outlook is very strong. So we think growth is going to continue and probably surprise on the upside, especially with the Fed cutting rates again.
How much risk do you assign to markets being disappointed by what the Fed does? Do you think, given the economic data that we continue to have, reading after reading seems to outperform?
Well, we had a historic, huge rise in short rates when the Fed raised short rates from 0 to 5.5%. They've begun a 50 basis point cut. Likelihood they'll cut more. And yet, in spite of that, we really, except for one quarter, have had at least modest growth through that whole two-year period. And we think that really, if anything, there probably is a lot of liquidity around in the system. And that's one of the reasons that inflation is a little stubborn. And also, we're seeing record prices for gold, which really doesn't suggest that there's any kind of a deflationary movement in the economy. So we think it's saying that mild inflation, at least modest growth, those factors are both very good for the stock market. So we think that basically risk assets like stocks will continue to do pretty well, surprisingly well, because people keep waiting and waiting for a slowdown in the economy, which really hasn't happened yet.
All right, Margie Patel, Senior Portfolio Manager for Multi-Asset Solutions at Allspring Global Investments. Thanks, as always, for joining us. We have more to come on the Asia trade. This is Bloomberg. This is the Asia trade, the latest from the corporate front. Netflix jumped in late trade after the streaming service added more than 5 million customers in the third quarter and topped expectations across all major financial metrics. Analysts had projected about 4.5 million new subscriptions despite challenges from last year's strikes in Hollywood. Netflix sees growth next year of as much as 13% from a mix of new members and price increases. Hyundai's record India IPO has been oversubscribed more than 2 times, with strong institutional demand making up for tepid retail interest. The sale saw initial weakness before picking up by the end of the 3-day period. The offering will raise $3.3 billion at the upper end of the range. The Indian unit's valued at about $19 billion, and shares are set to start trading on October 22. Bloomberg's been told that Nokia has cut almost 2,000 jobs in China. Sources say the move is part of a sweeping cost reduction program as the Finnish company grapples with a sluggish telecom equipment market. It's also said to be in line with a broad effort to reduce headcount by as much as 14,000. Heidi.
Take a look at US futures at the moment. We are watching, of course, when it comes to, has been a sort of a to and fro session overnight. Of course, the outside surprise when it comes to yet more strong US data and the weakening in treasuries. We saw that effect across equities as well. But take a look at how well the S&P 500 is doing at the moment. We're now poised for a 6th week of gains. This is the longest winning streak this year. This chart that you can see on your screen, that green simply showing the bull market from the global financial crisis. It is, despite a lot of the ongoing concerns about risks mounting on the horizon, be it Fed expectations, be it the outcome of the US election, it's pretty difficult to argue against that trajectory. We're also looking at a 5th straight quarter of gains there and a 10th month of gains out of the last 11 months. So despite the S&P 500 closing slightly lower in the previous session, it's pretty much a one-way track. And we're seeing kind of earnings still potentially building the argument that this would continue to. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching when it comes to Japan CPI at the moment. Japan September overall consumer prices rising 2.5%. That's being in line with expectations. We're seeing the sort of stripping out volatile fresh food prices as well as energy prices, a rise of 2.1%. Broadly, though, that core CPI coming up at 2.4%. That is a little bit higher than expectations of 2.3%. Of course, a lot sort of hinging on what we hear from the Bank of Japan in the weeks and months to come. The yen, of course, most recently falling to that key 150 level after what was yet another solid reading into the US economy. We saw the dollar rising against peers, right, and the Japanese currency really, again, this sustained decline, highlighting a risk of intervention. That is a key mark of 150 against the dollar. So we'll be watching that quite closely. So much of this, of course, is a broad sort of dollar bid on the strength of the US eco outlook, in particular the strength of the US consumer poll. But of course, we're watching a very key story when it comes to the corporate space in Japan.
Yeah, that's right. The Couche-Tard interest in 7&I. We'll get to that in a moment as well with our next guest, Richard Kaye, Portfolio Manager at Comgest Asset Management. Richard, I just want to start off, if I can, with your reaction to those CPI numbers. A little bit stronger than expected. There was some feeling we might see a pullback due to utility subsidies. Didn't happen. I'm just wondering what your opinion is of these numbers and where to here for the BOJ.
Thank you. The numbers were a bit stronger, but I think when you look at the detail, there's quite an element of imported inflation. I think that the weakness of the currency and the recent strength of global commodity prices probably explain the slightly stronger number more than endogenous factors to the Japanese economy. And to your second question, what are the consequences for Bank of Japan policy? I think the Bank of Japan, since its previous rate rise, has been extremely cautious in its monetary policy adjustment, extremely cautious on calling inflation a strong trend. We live in Japan. We look at Japanese companies that are trying to raise prices. It's not a clear story at all. Besides, again, the imported inflation element. And I think contrary to some global observations, Japan has been actually following quite a different path to other developed economies on the inflation story. There isn't really, again, an endogenous story, and the incentive for the Bank of Japan to change monetary policy dramatically is very small. I rather think if there is an adjustment by the Bank of Japan, it'll be cosmetic, and it'll be some ways out. It could even be in next year.
How clear is the story around the yen as well? Because we've got it back above or weaker than 150 at least. And considering the diverging rates journey of both the BOJ and the Fed, when do you see yen strengthening? I mean, there must be a sense of inevitability about this.
Yes, I think there is an element of inevitability about the yen strengthening. In fact, I'd prefer to use the word normalizing because the last few months, year or more of yen behavior actually has been abnormal compared to the multi-decades pattern we've seen before. I think the yen will continue to normalize toward its multi-decade level, but the trigger for that will probably be nothing to do with the Bank of Japan. It'll be entirely to do with the Fed policy, with US yields, and with the narrowing of the Japan-US rates and sovereign yields gap, which again I think is really nothing to do with Tokyo. It's everything to do with Washington, and it'll happen over time. And I think we'll see the yen actually is one of the strongest currencies among the major currencies because it's been so abnormal for so long.
Richard, of course, corporate reform is really the other big piece when it comes to the Japan turnaround story for international investors. Is 7&I in this sense and Couche-Tard's bid a litmus test for how committed Japanese policymakers and decision makers are to this?
Thank you, Heidi. Yes, I think you can interpret the 7&I discussion in that way. I think that you can also say Japan has been doing a lot in many ways. This is by no means the first engagement by a foreign company, a foreign buyer or potential buyer with corporate Japan. Remember that Renault has a large stake in Nissan, and that happened many years ago. Remember that there are many foreign bidders interested in the Toshiba semiconductor business, and there was never strong opposition from parties inside Japan to that. Corporate Japan has already actually been quite open, and the government of Japan similarly, to foreign intervention in governance reform turnarounds in the Japanese economy. But 7&I will be another interesting litmus test, as you put it, for that. I perhaps, like on the inflation story, take a slightly different view to consensus on this. I think 7&I has already done quite a lot of reform on its own. Yes, it still has not very accretive businesses, but those don't move the dial so much in terms of earnings. What it's done with the core legacy Konbini convenience store business, of course, is amazing. What it's doing with its US business is amazing and a very important growth driver for the company. I think Couche-Tard's bid is interesting. It's valuing the shares, I must say, quite highly. It's anticipating quite a lot of future growth. But whether that bid can really drive dramatic reform beyond what we've seen is something of a question mark. And if 7&I is ambivalent about that deal. It's not necessarily a sign of reluctance to talk with foreign bidders. It may be rather a sign that 7&I has already done quite a lot of work on its own.
Because it sounds like, as you say, a lot of that potential might be a little bit more exuberantly priced into the price. So how else would you rather kind of play this broader thematic, if not through 7&I?
I think there are a lot of companies that have been doing a good job of changing their business, perhaps in a somewhat unnoticed way, focusing on core strengths, certainly engaging with shareholders. But they've not been valued properly. They're significantly below global peers. Interesting, 7&I versus Couche-Tard in terms of multiple comparison, I think is an example of that. At least it was until the bid was made and 7&I's share price reacted. I think there are many companies across perhaps the small and medium cap area in Japan, which similarly are undervalued on a global comparison. They've been doing a great job. And I think that the Couche-Tard bid actually could wake up investors about the opportunities we have among those smaller cap names, which are less valued.
Richard, really great to have you with us. Richard Kaye, Portfolio Manager at Comgest Asset Management. Let's take a look at how we're sort of shaping up as we get into this Friday session, right? We're seeing a bit of downside there, trading in Australia off by just about 0.5%. We're still digesting the inflation numbers out of Japan as we get into the start of trading in the next hour in Tokyo. Nikkei futures looking modestly positive, but that inflation number slowing for the first time in about 5 months before the Bank of Japan decision later on this month. The board is still widely expected to keep rates unchanged there. But Paul, we're also again watching tech and chips in the session.
Yeah, definitely going to be a focus after TSMC posted a strong set of numbers. We've got the Taiwanese tech giant's ADRs closing up about 10% in New York. That's a fresh record high. For more on this, let's bring in Bloomberg's Annabelle Drewlers. Annabelle, there was a real sense of trepidation heading into this, but no problem. What were the highlights?
Yeah, it was a really strong set of numbers, and it was interesting. Of course, we had ASML earlier in the week and offering a pretty grim outlook for some parts of the semiconductor industry, notably around legacy chips. But TSMC basically blew it out of the water, and that was really highlighted how much demand there is for AI chips and how much TSMC also has such a big market share in this area. But the sales generally, they came in stronger than expected for the third quarter. We were expecting that as well, given we had the monthly sales figures adding up and pointing to that sort of result. But going into the numbers, it was really that watch, what would they say about margins in particular? And this was incredible, very impressive numbers coming through. So, for instance, we saw the gross margin for the third quarter rising to 57.8. The consensus had been 54.79 or 54.8. They also lifted their gross margin target into the year end. You think about the longer term average of what TSMC says it wants to see, and that's around the 53% mark. Toward the 60%, you're going back to record highs for the company. So again, it just points another signal perhaps of that demand you see for AI products in particular, because these are the ones where they can get the best margin out of it.
Does this ease concerns about potential misjudging when it comes to demand?
I mean, I think if the trading reaction on Wall Street overnight is any sort of indication, yes, we saw ADRs, as you said, Paul, rising up 10%. We saw a strong read across for other chip stocks as well. It really echoes what we're hearing from the likes of the NVIDIA CEO, other semiconductor executives, that the demand for AI is strong. It's just at the beginning. It's not just about looking at AI chips and hyperscalers that are using these AI chips. There is a large read across to other products like edge devices, integrating it into your PC, into your smartphone. So really they're saying this is just at the beginning here. The TSMC CEO is saying that the next 5 years of growth are also going to be healthy, and also nodding to CapEx plans as well, because they said their CapEx is going to be higher next year than this year. And we've been discussing, and we had that interview, I spoke with the tech minister last week, saying that TSMC is considering possible plans for expansion in Europe. They're already building their facilities out in Germany, Japan and the US, of course, as well.
Tech reporter Annabelle Drewlers there. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching when it comes to broader commodities, in particular oil and energy markets in focus today. We're seeing New York crude a little bit to the upside, steadying really that focus on the Middle East again after we saw the confirmed death of the Hamas leader. The first gain, though, we've seen in 5 sessions when it comes to crude and further developments across the region, particularly when it comes to reprisal involving Iran as well. We are seeing WTI trading just shy of that $71 level. We're also watching iron ore. We had that housing briefing from China yesterday. Not much in terms of surprises, although some promising developments were announced when it comes to some further efforts to try and shore up the property glut situation there. We're seeing iron ore looking pretty optimistic, actually trading over that $100 level there. And copper, again, reversing some of the gains that we saw after 2 days of gains, that rally that we saw yesterday, now taking a bit of a back foot there. Gold holding pretty steady despite these overall geopolitical concerns there.
Yeah, gold performing very well. And we've got gold stocks in Australia higher as well. Westgold Resources better by 2.85%. Northern Star, one of those stocks moving higher as well. And if you price gold in Australian dollars, the story gets even better. It's broken through that $4,000 an ounce Aussie dollar level. So it's a good time to be an Australian gold miner. Other things that are moving here, of course, the energy producers doing pretty well. Beach Energy right now better by 1.84%, and yeah, the oil price moving higher, as you mentioned there, in the wake of those events in the Middle East. The Hamas leader Sinwar meeting his end due to what appears to be a almost coincidental moment from Israeli forces.
Yeah, it's fascinating sort of looking through the details of how this was achieved over a year since October 7th, of course. Hamas leader Yahya Sinwar there killed by Israel in Gaza. According to Israel, of course, he was seen really as the architect of the October 7th attacks on Israel that sparked this most recent conflict in Gaza. Israeli Prime Minister Benjamin Netanyahu has vowed to keep fighting until all hostages still held by Hamas are freed. Joining us now is a Middle East analyst, Rodger Shanahan. Rodger, really great to have you with us and sort of reacting to the latest developments. And we know that this victory, as you put it, for Netanyahu came almost by chance or by accident after over a year of pursuing this individual. He says that the score is now settled. Can he claim this as a victory, given that we know that this sort of prolonged conflict has also come at the expense of a number of hostages?
Yeah, certainly you would classify this as a political victory, and Prime Minister Netanyahu was very quick to appear on television and claim victory for that, and said quite pointedly that while this is not the end, this might be the beginning of the end. As you pointed out, there are two political elements to Netanyahu's aims in Gaza. First of all was to kill Sinwar as the architect of October the 7th, and the other aspect is to recover all of the remaining 100 hostages. Whether the death of Sinwar leads to the recovery is yet to be seen, but certainly there's potential for the recovery to follow from this.
And at the same time, we're still reminded daily that we're waiting to see what the potential retaliation against Iran will be. And that just reminds us of this multi-front war against multiple proxies across the region, right? What sort of refinement of strategic goals would be happening here?
Yes, I think Prime Minister Netanyahu, as we said before, says the fighting will continue. And I think when he says that, he means on the multiple fronts that Israel's currently engaged in. There is the question of retaliation against Iran. I don't think that will change. There's a possibility that the target selection might change so that it doesn't fall into a tit-for-tat situation. And, of course, there's quite intense fighting on its northern border in southern Lebanon. They're not decisively engaged there at the moment, so in Lebanon, so most of it is an air campaign and limited ground campaign, so they can withdraw relatively quickly from there. But certainly there's still plenty of fighting that is likely to happen even after the death of Sinwar.
Yeah, and we have heard from Hezbollah in the past couple of hours now warning of an escalation there. So does the fighting just shift north as a result of this?
Well, I think they're still going to, the main political aim remaining for this multi-front war for Prime Minister Netanyahu is recovery of the hostages. That's still going to require military pressure at the same time as they pursue diplomatic means with the Hamas leadership, and whoever is appointed as the next leader of Hamas will give an indication possibly of how Hamas views the likelihood of a diplomatic solution to end this conflict. And at the same time, in Lebanon, the reality is for Hezbollah, the political aim for Netanyahu there is to provide security for Israelis to return to the north, the 60,000 of them. It doesn't take much for Hezbollah to continue to fire a few rockets into the north that negates that political aim. So I think we're still going to see fighting happening in the north for a while yet.
We've also heard from the US using this as an opportunity to ramp up pressure on Israel to bring a swift end to the war. How effective do you think that pressure is going to be?
Well, I think until the recovery of the hostages, there's no real exit ramp politically for Prime Minister Netanyahu. The heaviest domestic political pressure he has been facing revolves around the recovery of those hostages. Now he can claim a political victory about eliminating the leadership of Hamas, not only the Ismail Haniyeh, now his successor. So that part of the political narrative has been taken care of. The much more urgent one before we can get to a ceasefire politically from Netanyahu's perspective is release of the hostages, and that's going to be done really through negotiations.
You say that this provides the opportunity for an off-ramp. Do you think Netanyahu wants this off-ramp? Because we know that he's dealing with a number of legal woes, that a judge has said that he needs to begin testimony in his corruption trial by December.
Yeah, certainly. So there is a degree of time pressure for the Israeli government. Ideally, if there's any ceasefire from their perspective, they want a ceasefire to be on their terms, and those two terms really are the elimination of Hamas leadership, which has now been done, and the release of the hostages. When he can achieve both of those, then he'll have a much, much stronger domestic political base from which to fight any potential charges, but also to become re-elected with a majority in his own right, potentially, if he can be seen to be somebody who has withstood domestic and international pressure and prosecuted a war that eliminated Hamas leadership and achieved the return of hostages. That's his ideal scenario, and I think it's probably the only one that he will countenance before he takes the off-ramp.
All right, Rodger Shanahan, Middle East analyst. We have more ahead on the Asia trade. This is Bloomberg. Prabowo Subianto will be sworn in this weekend as Indonesia's next president. The former defence minister says he's aiming for policy continuity as he replaces the popular Joko Widodo. But as Bloomberg's Haslinda Amin reports, Prabowo faces questions over his past as well as challenges ahead.
President Prabowo takes office with an ambitious program, including a target of 8% growth in the economy. Indonesia Maju, or Developing Indonesia, is the key strategy. And harnessing the country's natural resources lies at its heart, especially nickel. Vital to the production of EV batteries, Indonesia increasingly wants to control not just the mining of nickel, but its refining too.
I think this is kind of a leadership that we'll see under Prabowo, someone who understands the international political landscape, who understands how resources are mobilized so that he can gain advantage from that.
Still, managing Indonesia's natural resources could be a potential flashpoint for foreign relations. Prabowo has been critical of the EU's new deforestation law, blaming the destruction of forests for palm oil production on the legacy of colonization. Indonesia has a track record of looking out for its own interests in international relations, a policy of non-alignment Prabowo will undoubtedly retain. And a significant strategic decision in a region that is on edge over China's muscular foreign policy.
Over the next 5 years, what I can imagine is a more active president in terms of foreign policy activity. We'll see Prabowo involved more in making foreign policy decisions.
Factor in a promised big increase in defense spending, up to 1.5% of GDP by 2029, effectively doubling current expenditure. The Indonesian Military Academy graduate arguing prosperity is closely linked to security. But the strongman reputation has a darker side. Lingering concerns about Prabowo's military record and controversy over alleged human rights violations during the Suharto years have raised fears about Indonesia's political future. No surprise is the image of a jovial, dancing grandpa he now prefers to portray. Haslinda Amin, Bloomberg News.
Do join us on Monday for the debut of Insight with Haslinda Amin, focusing on in-depth interviews with top global executives, newsmakers and innovators. You can watch that premiere at the times listed on your screen. And we do have the market opens in Seoul and Tokyo next as we head into this Friday session. We are seeing bonds selling off as traders repricing Fed rate cuts and watching that reaction to Japan inflation as well, slowing for the first time since April ahead of that Bank of Japan decision this month. This is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens and plenty of data coming up for us to get our teeth into today. Heidi, obviously a couple of hours' time we're going to get that big data dump out of China, but a little earlier, better than expected, or stronger than expected CPI numbers out of Japan. We're going to be keeping a close eye on 7&I as well when we get going in a few seconds.
Yeah, a lot going on when it comes to the corporate space as well as sort of the macro indicators right ahead of that Bank of Japan meeting as well. But China is definitely one to watch as we get expectations of yet more weakness in that economy.
So we're just a few seconds away from the open in Japan. We are going to be watching 7&I, as I mentioned, because Couche-Tard has been in Japan this week. Didn't manage to secure a meeting with its target, but says that it wants all of 7&I. The latest bid on the table there is $47.6 billion. And if we take a look at those shares at the open, we're seeing a modest rise for 7&I, about 0.4% right now. The broader Nikkei index better by 0.5%. We did mention those inflation numbers that we had out of Japan a little bit earlier on. They were a little bit hotter than expected, especially when you strip out the volatile items such as fresh food and energy prices. The national CPI reading there growing by 2.1%. The expectation was for 2%, but the headline number in line with expectations at 2.5%. And as Heidi mentioned, we do have that feed into the Bank of Japan meeting next week. No change expected there, by the way. The yen, meanwhile, still looking very weak, hovering around the 150 level. If we take a look at the Kospi, meanwhile, we have stocks in Korea also a little bit better by about 1/3% right now. We've got SK Hynix kind of flat at the moment, flirting with gains. We are watching the tech space as well, because after those rather miserable numbers we had from ASML in Europe, we weren't expecting great things from TSMC, but the Taiwanese chip maker really blew it out of the water, giving a bit of optimism under chip-related and AI stocks.
Yeah, watching tech pretty keenly today for sure. But take a look at what we're watching when it comes to Australia. We're just an hour into the start of trading here for the ASX 200. We are seeing a little bit of weakness there still, about 0.5% lower there. Reminder though, this is a market that has been trading pretty close to record highs, and we have seen quite a bit of strength, particularly when it comes to the miners as well as some of the financials as well. We are watching the direction when it comes to bonds as well. Aussie bonds really following the direction of treasuries lower, traders trimming their bets on what the Fed can potentially do in terms of easing this year amid further signs of robustness in the US economy there. We are seeing in particular when it comes to the 10-year real yields headed for that 16-week high for Australian bond yields, I should say. And we're also watching the picture when it comes to some of these oil traders as we just mark some incremental gains on the back of further developments in the Middle East. But Paul.
Yeah, I mentioned 7&I there. Let's just take another look at that stock. It is gaining pretty strongly in Japan now, better by 1.25%. And as we've been reporting today on Bloomberg, Couche-Tard now saying that it wants the whole thing, wants to buy all of 7&I. It is confident of getting clearance from regulators as well, although when the leadership was in Japan this week, they weren't able to secure a meeting with 7&I, Heidi.
Let's bring in Helen Zhu, who's the Managing Director and CEO at NF Trinity. Helen, really great to have you with us. And so we had a little bit of a slowing when it comes to the inflation picture and, of course, this sort of potential test for policymakers on what they do about 7&I. How constructive are you when it comes to opportunities in Japan, given that we have had a reasonable run-up in this market?
Well, I think the Japan market is going to be very much currency dependent, and we have seen that obviously it used to be the consensus long into last year and most of the beginning of this year as well. But the thing that really hurt the market was not only the domestic policy in terms of interest rate hikes because of inflationary pressure and other considerations, but also because of the currency, right? The currency getting a lot stronger. Unfortunately, the currency is going to be more driven by the U.S. versus by Japan domestic fundamentals at this point. So in some ways, I would say that it's going to be external factors driving the currency, and then external factors like China driving fund flow as well. So we're no longer as positive on Japan as a lot of other people are. We think there's better opportunities elsewhere.
Have you, I've got to ask, do you think there are better opportunities in China? Sort of, are you in the more positive camp that think that these stimulus measures that have been announced, are sufficient and are a good sign, or do you want to wait for more, particularly on the fiscal side?
I think for China, the risk reward has definitely gotten a lot better, right? So we had a period of time where the data was just indefinitely getting worse, and you had, deflationary forces everywhere. So that was certainly not positive for confidence. But this recent policy push starting the second half of September is really a, whatever it takes type of moment for the policymaker. So you've seen a whole slew of policies. Of course, the market ran up too fast, as it tends to do, and should not be a retail furry the way that we have seen. That's not necessarily sustainable. We've seen a reset in that, and now, versus earlier in September, the Asia market's only up about 10%, and Hong Kong just slightly more than that, off a very, very low base. So I think the risk reward is actually pretty good, but obviously people will want to see more evidence of fundamental recovery probably in the next 3 to 6 months before capital comes back to China. But I think the risk reward is definitely more positive versus for Japan at this moment.
Yeah, long China is getting to be a crowded trade after being unpopular for quite some time. Are you increasing your allocation there? And what more would you like to see from policymakers, particularly in terms of support for the property market?
I think you've really hit it right on the head, right? So basically the property market is going to be really crucial, not so much on the volume side, but really in terms of price stability. That's basically because, property is a large portion of the wealth of most households in China. And so the wealth effect is very much dependent on housing prices stability. And that's going to underpin consumption in a way that the market likes much more versus, let's say, just another round of infrastructure stimulus, et cetera. We have seen that after the property policies came out, that the market is starting to show some signs of stabilization. You see a lot more visitations throughout the Golden Week and a little bit of stabilization or even slight upward tick in terms of prices in the top tier cities. So that's usually the beginning, but it has to go together with a whole slew of policies, right? This big bazooka, fiscal, monetary, the support of the capital markets and the Asia market, all of that together, I think, can help to underpin a stabilization in the overall fundamentals.
And potentially, what do you see the impact of being on the China market from the US election? Are you exercising any caution around decisions in the lead up to that?
Certainly. I think the policymakers are paying close attention to that as well. So we saw that some of the meetings that were previously scheduled for late in October are likely to be pushed to sometime probably in the second week of November after the U.S. election happens. Clearly, the view of the market is that Trump would be a higher risk factor for China from a trade and tariff perspective because of the headline 60% tariff that he has talked about repeatedly. The reality is that probably whatever ends up happening will be a watered-down version, even if he does get elected. If Harris gets elected, then I think it's actually going to be risk on for emerging markets. The U.S. dollar will probably weaken to a significant extent because of less fiscal stimulus and support, and weakening of the U.S. dollar, which then supports Asia and China a lot more. So I do think that there is an element of people being on the sidelines to watch out for what happens with the election. But at the same time, the policymakers are also preparing the policy arsenal and pipeline to respond to that as well.
How are you feeling towards tech at the moment?
Great question. So tech is really interesting because it's one of these sectors that's actually started to price in a global recession. Obviously, tech was super hot for most of last year and the first half of this year, but recently we have seen a meaningful pullback. Firstly, I think because the positions were getting way too concentrated and the valuations fairly stretched. And secondly, because people are simply worried about the demand picture for smartphone and for PC going into next year, right? We've had, not much of a smartphone cycle in the past couple of months. Apple delivery has been a little bit of a disappointment. I think the upside surprise is really from two areas. One is that in the U.S., if you actually look at the consumer data, it's actually been a lot more resilient versus previous expectations. So that's recovered versus 1 or 2 quarters ago. And the second thing is really China and emerging markets, right? That's been a horrible demand market for quite some time. If the policy stimulus in China starts to work, I think that could actually give some uplift to the tech demand as well. So right now, I think a lot of areas in the markets do not price in much recession risk. It's all about no landing, like credit spreads and financials and, U.S. market overall. But tech, I think, actually has some potential for upside if the cycle starts to turn.
All right, Helen Ju, CIO at NF Trinity, thank you so much for joining us today. I want to check in on how Fujisoft is moving in Japan at the moment. A little bit of movement to the upside there, about 1/5 of 1%. We're watching the stock because the founder, Hiroshi Nozawa, says he supports a take-private proposal for that company, which has been made by Bain Capital. He says this in a letter which has been obtained by Bloomberg News. Nozawa says he sees Bain as a white knight with an approach aligned to Fujisoft and its management team. Fujisoft's been coming under some pressure from its largest shareholder, Singapore-based 3D Investment Partners, to consider options such as taking the company private. So this letter that we've seen from founder Hiroshi Nozawa seems to support the possibility that this proposal from Bain Capital might have a little bit going for it, Heidi.
Yeah, we're watching broadly trading in Asia, right, as these markets try to reverse the longest losing run since about May. A lot of those China woes at play here. But take a look at some of the movers that we're seeing early in the session. A lot of these are sort of adjacent to what we saw overnight in the US session, which was the moves on the back of TSMC raising their 2024 revenue outlook. We did see US chip stocks rallying from the pre-market session after Taiwan Semi posted that better than expected gain in quarterly earnings. Strong sales of NVIDIA AI chips was one of the biggest sort of elements there. So that beat potentially offsetting some of the concerns over the sag in mobile demand. But it is a pretty bifurcated view there. You're seeing some marginal gains when it comes to Samsung Electronics, but not such enthusiasm with the likes of SK Hynix, Tokyo Electron and Renesas all seeing some, to some extent, some steep declines there. SK down by 1.8%. The other story that we're watching is really Asian entertainment and streaming names. Netflix posting another strong quarter despite the impact that we saw on the writers and actors strike. New subscribers topping 5 million. That was a beat on Wall Street estimates. We also saw sign-ups this quarter expected to top the previous period there as well. So sales for the period up 15% to just short of $9.9 billion US in that shareholder letter. Some of the other details suggesting that earnings increased to $5.40 a share. And we are seeing that rise continue as Netflix rose over 5% in the after-hours trade. And we're seeing that carry through to some of the Asian entertainment names as well. Watching oil as well as gold, of course, two of the movers when it comes to these developments on geopolitics. Coming up on the Asia Trade, we get the latest on Israel saying it's killed the Hamas leader Sin as the architect of the October 7 attacks. We get a closer look at the implications next and what does come next. This is Bloomberg.
I'm standing before you today to inform you that Hamas leader Yahya Sinwar has been eliminated. The person who committed the most terrible massacre in the history of our nation since the Holocaust, the mass murderer who murdered thousands of Israelis and kidnapped hundreds of our citizens, was eliminated today by our heroic soldiers. And today, as we promised to do, we settled the account with him. Today, evil has suffered a heavy blow, but the task before us is not yet complete.
Israeli Prime Minister Benjamin Netanyahu there. Well, the US sees Sinwar's death as a pathway to end the war in Gaza. President Biden says now is the time to move on and move toward a ceasefire in Gaza and bring the hostages home. Bloomberg's Michael Heath joins us now for the latest. What's the likelihood of this happening? And I suppose, the US sees this as an off-ramp. Does Netanyahu see it this way?
Yeah, I mean, look, there's contrasting political, goals here. At the end of the day, obviously the US would really like hostages released, Hamas to take the offer of safe passage into exile, and for this to, a way forward to be found. And at the end of the day, unless you're fighting Nazi Germany, there's no military solution to this. The military is a lead up to a political solution. And the issue is that Prime Minister Netanyahu hasn't given much indication of that, and he has good reason. On one hand, they don't want Hamas to be able to reform, but on the other side as well, he wants to put as much distance between himself and October the 7th as he possibly can, because he obviously oversaw the security lapse, and in Israel they have a strong tradition of holding inquiries and holding people to account for that, and that tends to be the end of a political career. So there's no incentive for him to stop. Outside of, obviously, there's still a fight with Hezbollah, there's a response required with Iran, but nonetheless there's no political incentive for him to say, right, let's try and bring an end to this. Even though, theoretically, if you could get a truce in Gaza that would stop Hezbollah from shelling, that's what they've said would happen, and we could really make progress there.
What's the political incentive for the US as well to bring this to a swift close?
Well, look, it's very high, Paul, and part of the calculus, I think, for Netanyahu is that if President Trump wins, or former President Trump wins, that Israel won't have to really deal with too much pressure from the US. I mean, Trump's likely to give Netanyahu a free hand. On the other side, like in many countries, the Democratic Party is caught in a real vice. On one hand, President Biden wants to stand by Israel. All his inclinations are to support Israel, but this is not a typical Israeli government. It's a very right-wing government. There's elements there that basically follow sort of messianic views in terms of the future of the Jewish race. So the US would love it to come to an end because it divides their base. I mean, people who are sympathetic to the Palestinian side are angry at their government. People who are sympathetic to Israel don't think the US is doing enough. So there's just a no-win there for them.
What do we know about how much Hamas could potentially regroup after this, in terms of successes, in terms of how badly damaged they are versus, say, Hezbollah being, taken out with Nasrallah?
Yeah, well, look, I mean, the different groups, obviously. I mean, Hezbollah is much stronger, has much better connections with Iran, etc. So there's no doubt that Hamas has suffered really, really heavily here. But by the same token, when you level a region, the support, the people willing to volunteer to fight Israel are going to be high. I mean, it's just a recruitment campaign in many respects. So killing one person doesn't ever end, a movement like Hamas. I mean, they see themselves as a national liberation movement now. But the thing is that Sinwar was such an exceptional leader in many ways, evil but exceptionally capable, that it will be hard to replicate his abilities there.
All right, Bloomberg's Michael Heath there. We're more ahead on the Asia trade. This is Bloomberg. Let's take a look at how shares in 7 & I are tracking higher is the short answer, better by 0.8% right now. And this is after Couche-Tard has said that it now wants to buy all of 7 & I. The number on the table at the moment, $47.6 billion. However, on a recent visit to Tokyo, I believe they've been there this week, they were unable to secure a meeting with 7 & I. However, they remain confident and also confident of getting clearance from regulators. So 7 & I holdings higher on this news. So for more on Couche-Tard's takeover bid, let's bring in senior editor Reid Stevenson in Tokyo. So Reid, Couche-Tard, as I mentioned, there have been in Japan this week. How did the trip go?
Indeed, it's been an interesting string of days. Actually, it began last week when we got an indication of a new price from Couche-Tard for 7 & I, a higher level, roughly around 7 trillion yen. And as you just noted, the shares aren't really up. In fact, they're well below that indicated price that Couche-Tard wants to pay for all of 7 & I. And then what happened after that was the executives, the founder, Alain Bouchard, and the executive team came to Tokyo seeking a meeting with 7 & I's management. They weren't able to get that meeting, and thus we also saw them sort of going directly to stakeholders, granting interviews and really kind of making their case in the public domain for the acquisition of 7 & I. And, I just have to sort of note how unusual a move this was, because Couche-Tard has been known as quite a media-shy company. They don't like to go out and kind of negotiate in public. So this really is an interesting step and really kind of sets up, what we might see in the coming days, weeks, and months.
The reticence from 7 & I and Japan aside, there are a few other issues and challenges ahead.
Indeed. One of the reasons that 7 & I cited initially when it rebuffed the first sort of indicated price that Couche-Tard put forth is regulatory concerns in the U.S. I put that question to the management team at Couche-Tard yesterday, and essentially their answer was, look, we've done this before. We've done divestments before. We know what was probably going to have to be required in terms of, assuaging any FTC antitrust concerns. And they said that they in fact have some specifics that they want to put in front of 7 & I management, but they haven't quite gotten there because they haven't really opened negotiations. The other thing to note here is that the key person to talk to over on 7 & I's board is Steve Dacus. He's the head of the special committee that's actually tasked with vetting these kinds of offers or approaches. He's actually not in Tokyo right now, and so really, the way to do it is through the special committee. And so to a certain extent, 7 & I is on solid ground in the sense that rather than going directly to the CEO and chairman, Ryuichi Isaka, they want 7 & I to go through to the special committee. And in fact, they did meet, I don't know whether it was in person or virtually, at some other juncture. And so it's not like, this is a complete standoff. It's just a sort of a missed opportunity. But at the very least, we're getting a lot of sort of information and really just kind of projection as to how serious Couche-Tard is in trying to get this deal done.
All right, senior editor Reid Stevenson there. And Heidi had a bit of central bank action over the past 24 hours as well. The ECB cutting rates again. That was much expected, 25 basis points. That's the third time now this year. Christine Lagarde saying she sees a recession as unlikely, but inflation's really been playing ball for the ECB. We've now got swaps market pricing in 50% probability of 50 basis points reduction in December. There was a bit of a tweak to the language around inflation as well, which has been coming down faster than expected. Let's have a listen to Madame Lagarde.
We believe that the disinflationary process is well on track. And all the information that we received in the last 5 weeks since our last monetary policy decision were heading in the same direction, lower. That is what has caused us to make the decision to cut our 3 rates by 25 basis points.
And of course, this kind of debate over synchronicity between the ECB and the Fed is rearing up as we see the ECB moving ahead as expected. The growth picture there a whole lot more uncertain. At the same time, we continue to see, print after print after print showing US economic resilience, particularly when it comes to that strength that we continue to see in households, in consumers, right? That's what we're seeing when it comes to the kind of repricing again overnight from, there's Fed cut bets on yet more solid data. We saw US retail sales rising by more than forecast in what was really a broad advance. So traders there just pairing wagers about Fed rate cuts twice more this year. And we also heard from Mohammed El-Arian, the president of Queen's College, Cambridge, saying that the market is really wrong when it comes to synchronization between the ECB and the Fed. He sees the ECB lowering rates more than the Fed, and that makes the UK and Europe more attractive potentially. But take a listen to what former New York Fed President William Dudley had to say.
We've actually seen a little bit of tightening of financial conditions in terms of the bond market and mortgage rates over the last few weeks, as the market went from expecting short-term interest rates to decline below 3% to now more in the 3.25%, 3.5% range. So right now, the market is where it is in terms of financial conditions because of the expectations that the Fed is going to cut interest rates a lot. If the Fed doesn't do that, then financial conditions will have to adjust.
Yeah, so clearly this is still going to be, even as we deal with Middle East tensions, with geopolitical tensions, with getting so close to the US election, the question of, a policy error from central banks remains sort of front and centre. You take a look at just the moves that we see across treasuries, right? But of course, here in Australia, there's no great indication that the RBA is really in any hurry to catch up.
No, we had very impressive jobs numbers here in Australia yesterday, much stronger than expected, and that sent the Aussie dollar higher as well. So any hopes of RBA easing, they've been shoved well out into the future, somewhere in 2025 now. I believe it was February before. It's probably later than that now. So you see the Aussie dollar there at the bottom of your screen. It's back below 67 cents, but only just. And yields are continuing to be in the green there for the US. All right, we have more to come on the Asia trade. This is Bloomberg.
Take a look at how we're faring this final trading day of the week as Asian markets are seeing a bit of a sort of disconnected trading session. We're seeing the Nikkei 225 just up by about 0.3%. We did have some inflation numbers that perhaps surprised a little bit to the downside in the sense that that was the first slowing of the core inflation reading for the first time since April and comes ahead of that key BOJ decision where they are still expected to keep the rate unchanged. But whether that sort of, hangs on potentially government subsidies with a limited impact on the BOJ, that's something that we're watching out for. But we are seeing a little bit of gains there when it comes to the Nikkei 225. The Kospi, though, seeing downside. We're seeing some now steeper losses in Australia as we come off those record highs there. But really, bond markets are what we're seeing when it comes to that sell-off. Traders repricing Fed rate cuts, and we're seeing Australia and New Zealand bonds kind of following suit there.
Well, China, of course, is set to release key economic data later on Friday. That's due in a little under 90 minutes' time, in fact. GDP growth seen at the slowest in 6 quarters, and that's as debate intensifies over whether stimulus measures announced so far are going to be enough to spark a revival. And joining us now is Wang Tao, head of Asia Economics and chief China economist at UBS. Wang, thank you so much for joining us. And we do, of course, have to point out that these numbers that we get today predates the announcement of government support. But we've seen downside surprises before, even though our expectations are being well managed here. Do you expect any change to the government's plan based on what we see today?
Thank you. I think the government's recent announcement indeed probably anticipate how weak the third quarter data was going to be. And today's announcement would show that property downturn has continued and sales probably deepened the year-on-year decline. We already got the CPI and PPI inflation announced, and that's weaker than expected as well. So a lot of signs already pointing to the continued weakness in the economy and they wanted to turn around. And I think the market believe that what has been announced may not be sufficient, and we're all waiting for additional announcements. So I think it's possible, at least following up the Ministry of Finance announcement, there will be supposedly a one-off large adjustment in local debt quota to help with local government finances, and that could be coming. And there could be additional incremental policies as well. So I do believe additional policies will be on the way.
Do you feel that this 5% growth target is still credible under the current settings, or is more going to be required to make that a reality?
Well, we only have 2.5 months left for the year. So with this available funding, supposedly for the third quarter, 2.3 trillion RMB, that's already there, plus the 400 billion additional local government bonds. These are announced by the Minister of Finance. If they can be used up right now in the fourth quarter, we could get pretty close to 5%. But I think that is a tall order to require such a rapid deployment of funding. That's quite rare, and especially since it's not clear they have a lot of spending projects. It's more about reducing arrears and the restructuring. So it may debt restructuring, so it may take a little bit longer. So I think there may be a bit of upside to our current forecast of 4.6%, but I think we will most likely still on this side of 5%. And also it depends on how bad the third quarter is, of course, because it will require a lot more if the third quarter has been weaker than expected.
Just looking at this chart, which shows domestic activity indicators all missing in August, right? Be it you're talking about fixed asset investment or retail sales or industrial production. How much fiscal firepower do you think is needed? And do you think they should seize upon the fact that there's a little bit of confidence and animal spirits, at least for financial markets, and they probably shouldn't wait too long to be adding more to the fiscal side?
Yes, completely correct. I think they shouldn't really wait for too long. Now the market and investors are expecting the authorities to do more to stabilize the economy. And if they don't follow up, I think that confidence will fade and has already started to fade. What is more needed? I think for the short term, we think 2 trillion RMB is needed immediately. And that's not talking about next year. Next year, we're talking about a few more trillion. But for the time being, the additional sort of concrete additional money is the 400 billion, right? And the 2.3 trillion they talked about is not really new. But even if they can finish spending that, that's great. It's just a matter of how to best spend it as fast as possible instead of still working on the details, still waiting for local governments to decide and so on. That will take some time. I think channeling funding to pay down the arrears to the corporate would be really helpful because they need the money to pay their staff, pay their suppliers. That's cash flow immediately going to the system. Also increasing some of the subsidies to the household sector that could immediately lead to spending as well. So those two things I think need to happen fast, as well as anything they're thinking on the property market side. Again, it seems that details are still in the works from yesterday's announcement. It's all about the plan and so on. I think the market seems a little bit unconvinced how quickly and to what extent the government, especially the central government, is going to help. I think the market remains a little skeptical on that.
Some of the slowdown is structural, right, including aspects of the property situation. So can they successfully kind of thread the needle when it comes to allowing some of that slowdown for a new normal whilst not completely spiralling into deflation? Or do you think this is going to be more of a whatever it takes moment eventually and they kind of go back to the old playbook of stimulus?
I don't think we will go back to the, to the previous playbook anymore. It's not possible, in my view, because as you mentioned, the property slowdown, a big part of that is structural. Population is declining. There is oversupply. You cannot just turn the clock back. And also, the overall government finances, especially at the local level, is no longer where it was 10 years ago even. So there's constraint and infrastructure, the amount of good infrastructure projects available is also limited. So whatever they are doing now, they do need whatever it takes to just stabilize the situation, and then combined that with the structural reform. So allowing the structural shifts to happen does not preclude having a very sizable fiscal stimulus, as well as monetary easing and property easing and so on, just to prevent that deflationary spiral, as you mentioned. Otherwise, I think we can't just say this is a structural, there's nothing you can do. Experience from the US, from Europe on sort of both positive and negative sides suggests that the macro policies can do something to help or worsen the structural adjustment.
Wang Tao, always great to have you with us, Head of Asia Economics and Chief China Economist at UBS. You can also turn to your Bloomberg for more on this as we await that data dump. We'll go to TLR Vigo to get commentary and analysis from Bloomberg's expert editors, Paul.
Let's take a look at how some of these Asian chip names are faring. We did, of course, have numbers out of TSMC overnight, or yesterday afternoon at least, and they were pretty good. Beat quarterly profit expectations. We'll get to that in just a moment. Not really translating into great things for some of these Japanese chip names, however. Take a look at Tokyo Electron. It's been having a wretched run this week. It's off another 1% today. It's down 13% over the past 3 days. Lasertech Advantest also declining, although not by quite so much. Of course, we saw these stocks take a real hit following ASML's rather weak earnings announcements, and that made everybody a little bit nervous about what we might see from TSMC, that company, of course, being ASML's biggest customer. So let's get some more on TSMC's results. Bring in our tech reporter, Annabelle Drulers. Annabelle, safe to say, heading into this, there was a bit of nervousness, but we needn't have worried.
Yeah, at least not for TSMC, though. I am a little bit surprised, actually, we're not seeing that flow across to other chip names in Asia so far, so we can look for the reasons for that throughout the day. But TSMC itself, yeah, we were expecting strong sales figures. I mean, one of the quirks of Taiwan in particular is they need to report monthly sales figures. So by the time you get to the quarterly results, you've already got a pretty good guide. But what we were watching out for is what they said about the outlook and also their margins. And on the outlook front, we saw them raising their 2024 revenue guide, even though they'd just done that a few months ago, and also expecting a strong 2025. The CEO even saying the next 5 years is looking pretty good for the company. Margins-wise as well, that came in strong. So you saw it rising to 57.8. That was a few percentage points above the consensus. They also lifted into year-end, and you're looking at sort of tracking back toward historical highs for the company. That focus on margins also tells you that they're making more money from their highest revenue products. That's AI in particular, and this is where TSMC has very much a stronghold in the market.
We're also hearing these reports that the US is looking into their dealings with Huawei.
Yeah, and I'm wondering whether that's sort of casting a bit of a shadow so far, but the information has just come out with a report in the last few minutes, and what they're saying is that the US Commerce Department is looking into whether TSMC has been making AI chips for Huawei in China, and that would, of course, be a breach of US rules. So what their sources are saying at the information is that possibly Huawei has bought chips from TSMC indirectly using intermediary companies. So then that's that question of, okay, what's the due diligence that TSMC is doing on its customers in this process? It does follow a story from the information that we had at Bloomberg earlier this week, saying that US lawmakers are pushing the Biden administration to block Huawei supplies from using American chip-making gear. So it does just tell you that there's a lot of pressure in Washington in particular, and it doesn't seem like it's going to dissipate before or after the election, given that sort of competitive pressure between the US and China.
We've got some more results today. Chinese battery maker CATL due later. What can we expect here? Yeah,
this is an absolute linchpin in the EV supply chain, and actually the results we get from CATL could be one of the best that we see for the company ever. There's a couple of reasons for that. Well, firstly, we've seen really strong demand for CATL's products, particularly in China, where, of course, the EV market is a bit more robust than what we see in the US and Europe, where it's sort of that customer apathy toward EV products still. And so Bloomberg Intelligence team is saying that net income could have risen 20% sequentially to around 15 billion yuan in the third quarter. The other thing to note as well is that the price war that spread from cars to batteries has started to ease off in China, and so that's something to note as well. Just a headline dropping, I'm seeing TSMC shares are indicated 5% higher in Taiwan, so certainly one to watch, of course, that open in about 15 minutes from now.
Annabelle Jewellers there. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching when it comes to trading in Japan at the moment. We are seeing equities putting on about 0.4%. We are seeing that broad bond sell-off more regional, following on the back of what we saw with treasuries, weaker traders repricing those Fed rate cuts going into the end of the year after yet more robust numbers, this time when it comes to US retail sales. But we are also getting some interesting inflation readings out of Japan as well today. That inflation reading showing that we saw key inflation slowing for the first time since April, ahead of the Bank of Japan meeting this week. Potentially that hinges on what we saw with government subsidies and unlikely to have a big amount of impact when it comes to the broader policy path, of course. But we're also seeing the resumption of yen weakness past that 150 level. Let's get some more from our Tokyo economy and government reporter, Erika Yokoyama, who, hopefully can give us a little bit more context in terms of the deceleration that we're seeing, or is this sort of a one-off blip because of these subsidies?
That's so true. Like, it is a little bit complicated to read the actual strengths of price gain at the moment. So the headline figure slowed down in September as the government re-implemented those utility subsidy to help household. And actually, the Japanese government has been implementing and terminating these measures, then make it totally complicated to read the actual strengths. But if we really focus on the underlying trend through CPI, excluding fresh food and energy, I think it points to the stable price pressure in place.
Well, we do have a Bank of Japan meeting coming up at the end of the month. We're not expecting any change. Is there any implication here for a possible decision?
I think largely the BOJ is still on the track for the tightening, but at the same time, I don't think the bank will rush doing so for example, in October. The bank probably wants to see more positive signs in economy. That includes like how overseas economy, especially in the US and China, are doing, and whether Japan's domestic consumption kept recovering in the summer quarter through the upcoming GDP figure. And also, the next round for the wage negotiation is just about to start today. So I guess the BOJ also wants to see how it goes before making any decision.
Does this have any implications for Prime Minister Ishida ahead of the election?
That's right. So the election campaign has just started earlier this week. Then I guess the parties will look into today's data very closely to shape their policies. For example, Prime Minister Ishida has already indicated that he's considering larger economic packages than those of former Prime Minister Kishida's, but he hasn't really indicated what exactly he's planning as a policy on the part of the economic measures. Then I guess today's data will probably give him some hints and directions. For example, like the utility subsidy in place has shaved off more than 0.5 percentage point off from the overall CPI figure, meaning that it's actually helping household from these price burden. So I guess he may consider extending those measures as well.
All right, Bloomberg Tokyo economy and government reporter Erika Yokoyama there. The Bloomberg opinion columnist Daniel Moss thinks the yen's paying the price for a BOJ that doesn't quite know what it wants. He joined us now to discuss his latest piece. And Dan, the dollar's up against just about everything this month. What makes Japan stand out?
Morning, Paul. Look, the yen had a great third quarter. Not as fantastic as for the ringgit or the Thai baht, but pretty close. There were two things working in its favour. One, an extremely hawkish Bank of Japan coming out of the July 31 interest rate decision, and the Fed's pivot toward lower interest rates. If you accept that the biggest thing that's been weighing on the yen in the preceding 12 months was the interest rate gap, then these things have got to be good. My point in the column today is the BOJ seems to have lost its way since that July 31 meeting. Let's recap what we got on July 31. We got an interest rate hike that only a minority of economists forecast. We got a pretty aggressive taper on the bond buying. And we got some very muscular forward guidance, which suggested that the economy did not need to exceed expectations. It nearly needed to meet them. Boom. Next meeting, very little of that was present. No one expected a hike, but that robust forward guidance was missing. And what we had was some waffle about, well, external factors are important. We need to worry about the health of the US, etc. Fine in isolation. They should worry about the health of that. That's not what was emphasized at the July 31 meeting. So where are we? You know, we're used to talking about central banks as having a great deal of power. BOJ looks awfully diffident right now.
The BOJ sounded really quite hawkish in late July, but now they're sounding almost dovish. So what sort of happened and transpired there?
You know, you could do a lot worse, Heidi, than look at the yen. Yen was quite weak for much of this year, and that sort of triple barrel package on July 31, coupled with the Fed's pivot, certainly strengthened the yen dramatically. So after that, the pressure was off. Come the September meeting, Wader could resume his communications waffling. You know, it's such a shame that communications is not given priority at the BOJ. It is an essential part of modern policymaking. And this is not just my thought bubble, by the way. No less a person than Ben Bernanke wrote that successful policy is 98% talk, 2% action. So where are we? You're left with the impression that they're bobbing and weaving based on the exchange rate as much as anything else. Now, we talk about inflation targeting central banks. What about a currency targeting central bank? Are we de facto looking at one right now?
Bloomberg opinion columnist Dan Moss joining us today out of Canberra. More ahead on the Asia trade. This is Bloomberg.
Calls for walling America off with high tariffs on friends and competitors alike, or by treating even our closest allies as transactional partners, are deeply misguided. Sweeping, untargeted tariffs would raise prices for American families and make our businesses less competitive.
It's U.S. Treasury Secretary Janet Yellen there warning against the use of sweeping tariffs. And Heidi, it was earlier this week that Donald Trump told Bloomberg that tariffs is his favourite word. I don't think it's Janet Yellen's favourite word at all. But there's some clues in there, aren't there, as to who China might prefer to win the U.S. presidential race. Officially, there's no word naturally, but if you start going down the chain a little bit in China, you do get some hints as to what they would prefer. The Shanghai Institutes for International Studies, for example, the president of that gave a lecture in Singapore recently saying the second Trump administration will bring greater uncertainty, instability and unpredictability compared with the Kamala Harris presidency. So really just verbalizing what I think most casual observers would have thought anyway. With President Trump, you're going to get big, unpredictable change, definitely tariffs. With Kamala Harris, meanwhile, there is a sense of continuity. And what we don't really notice is that the Chinese Foreign Minister Wang Yi, the National Security Advisor Jake Sullivan, they meet fairly regularly in a very low-level way to talk. And there is an expectation that that would continue under a Harris presidency.
Yeah, and it's interesting because, you know, this feels like, given that it is one of the greatest competitive relationships of our times, it's never going to be perhaps a wonderful relationship or characterised as such, but certainly it has improved, you know, in terms of coming off the troughs that we've seen where there was not as much communication, right? We had the visit from Pelosi to Taiwan, we had the shooting down the alleged spy balloon saga, remember that? So it does feel like we've come to a level of stabilisation. Whether or not that can be maintained and what happens if there is a return of the former President Trump is a great deal of uncertainty ahead. It also means that there's a great deal of uncertainty when it comes to China-focused investors as well. There's a bit of a word of warning for traders that have been putting billions of dollars into the Chinese stock ETFs. That's been such a favourite way to play this revival of the Chinese economy, the stimulus story. It's pretty prone to big reversals in terms of a strategy. It's also lost a cohort of some pretty ill-timed investors as well. So watching in particular when it comes to ETFs ranking alongside the flagship fund of Cathie Wood. This is Bloomberg.